Good evening, everyone. This is our masterclass Saturday evening session, as always at 4 o'clock this time. We will be taking a look at the Nifty, Bank Nifty, and the sectoral indices one by one, exactly the way that we do every weekend. I have the weekly on the left and the daily on the right, using Heiken-Ashi as the main frame and candlesticks up here. Those who track candlesticks, uses candlesticks, the patterns that are beneficial out of the candlestick analysis, definitely will keep an eye on both the types of prices. So, beginning with the Nifty. Now, it was difficult. The week was difficult because it had a breakdown, it had a bounce back, and it has a consolidation. Let me walk you through these step by step. First, on the weekly time frame, I still happen to have a downtrend and a downward momentum. The market did bounce back 3-4 weeks back and had cooled off after that. So it has turning out to be a range bound activity over the last 7-8 weeks now. Of course, obvious levels are coming at close to that 24,800 from a slightly longer point of view. From a short-term point of view, we have levels below that. And on the downside, of course, the levels are coming down to these fractal lows, which is little below 23,500. If I take a look at the last 2 weeks, it is giving me a pullback after a bearish week, which means that in any case, by any chance, if going forward the market breaks last week's low, if this happens, we are headed further down. And it has to happen immediately, like it should happen next week. On the other hand, these kind of Heiken behavior, if the price takes up above last week's high, then we can, go for 24,800 and maybe further upside. So it's kind of a make or break. Break is slightly more because we have the support of the momentum on the downside, the support of the trend on the downside, and honestly, most of the sentiment is still negative. Though we had a bounce back, I'll come to that when we go to the daily time frame. So I would say 60-40, 60 downside, 40 on the upside. Now it was a difficult week because the fact that we had a breakdown that did not sustain. Coming down to the daily time frame, you will notice that we had a slip below the last fractal low. It just goes below and immediately bounces back and extends. It gave you a fall, a 2-day rally, and Friday's move was more like a consolidation. So the daily chart, if I analyze the price behavior from the daily point of view, things are improving. Momentum has improved quite a bit. Trend direction is improving. I have good looking Heikens back to back. Our EMAs have just started to, turn up. So things are improving there. A look at the candlestick clearly reflects that Friday was more of a consolidation, which kept the market down. Now, we probably did not expect 183 points down move on Friday after a 445 points move the day before that. But it's okay. Nevertheless, it's all right. So from a short-term point of view, it is extremely important that the market scales above last Thursday's high, which will imply bullishness. So I expect a move above 24,200 and the index should scale above that. The gap down has been taken care of. And let's take it bit by bit, step by step. If we have a move above 24,200, let's not be too optimistic. We can expect a move towards 24,800. Short term, breakout level. Short term, upside possibility. Downside. Now for the downside, because my Heiken is telling me that Thursday, Friday is pretty good, I should give enough room for things to deteriorate before I decide on going bearish. which means that I will wait for the low as of now, whatever charts I have in front of me. As of now, I will wait for the low of Wednesday, that was the 1st of Jan, which is close to 23, 530, 535 kind of lows. So I am I'm allowing myself this much space for the markets to kind of stabilize before it goes up. It can. Below that, I think the index will go more bearish. Till then, till these lows are not broken, I can expect a range bound choppy market. Below that low, it tilts clearly more towards the downside. Those who follow Bollinger Bands, those who understand, there's a pinch happening on the daily time frame. Pinch is a phenomenon when the upper Bollinger Band is falling and the lower Bollinger Band is rising. And ideally, most of the time, such a pinch leads to a directional move. There will be a directional move for a couple of days. Which way? It's going to be interesting because there are evidences of an upside possibility, and from a larger perspective, there's evidences of a downward move as well. So our job will be to prepare ourselves accordingly in terms of levels and strategize whichever way the market decides, we're going to trade accordingly. Now, what we did right now for the last few minutes is a proper analysis, deciding on the levels, based on these levels, deciding on wherein I will go bullish, till what point, wherein I will go bearish, and what can I expect. So these analysis, levels, inference, everything is done. The problem in actual trading will come when it goes both the ways. When it becomes really choppy, breaks the lows, breaks the highs, could not sustain, sharp fall. That's a wild, undecisive, crazy, choppy market. Happens. So if you're relatively new to the market, or in the last couple of weeks, you've got beaten, whipsawed, stopped out, back to back in your short trades as well as long trades, or if you're a long only trader, if you have faced stopped out situations, don't lose heart. It happens. That's the kind of market we are dealing with right now. With that, I'll quickly take a look at the broader markets and the sectoral charts. Now, you know that I have created these tabs wherein I take a look at all the broader markets as well as the sectoral indices one by one. Let me take a look at it and then I'll boil down to each one of them. So this is the broader markets wherein I have the 500 mid cap and the small cap. And let me give myself room to analyze the weekly charts first. A big outside bar on the CNX 500, the mid cap as well as the small cap. Same logic like that of the Nifty. If the weekly lows are broken, expect some serious fall. And that's all right. That's understandable. Between these three, you can see that the small cap had given the best bounce back earlier. And it's the nearest to its all-time highs. So it seems like the flavor of the small cap and the mid cap rally is still on. Apart from that, there are no significant readings. It's also an HHGB on the weekly time frame of both the small cap as well as the mid cap. So it's again a make or break kind of a situation. So going forward, Monday, Tuesday's trade is going to be interesting. We may see a range bound broader market situation. We may see that. As of now, things are improving trend wise. Momentum is not supportive. When we see this kind of a divergence between direction and momentum, choppiness. So if you trade next week, whatever stocks you find and you're trading, make sure to not hold on to your trades for too long. Hit and run trades is what I like to call them. Short-term trading. Don't expect any big moves on the upside or on the downside. Moving on to the next set of charts, which are essentially the Bank Nifty, the finance, the private bank, and the PSU bank. This helps because I can look at all four of them at one shot. It saves time also. Weekly chart first, and the Bank Nifty is so very range bound. This is getting reflected, of course, in the finance and to a lot of extent on the private sector banks. PSU banks, on the other hand, had its share of fall and now choppy behavior. Going back to the Bank Nifty's chart, it's not a very good chart. I think we noticed this. You will remember that Thursday's 400 plus points bounce back did not see a significant participation from the Bank Nifty and the financials and the banking stocks. And so the weekly chart of the Bank Nifty is not as promising as that of the Nifty and the others. Bar chart has given us a outside bar. My momentum indicators are beautifully still down. Heiken Ashi is not that great. Same story with finance, I'm not surprised. Same story with private banks, and similar story with the PSU index. Of these four charts, the PSU banking index's momentum seems to be improving a little bit. But I'm not too keen on this, it's extremely SBI heavy. So, till this point, I can make a conclusion, or I can strategize position myself that if last Thursday's rally, Wednesday and Thursday's rally fails, and if the overall markets lose further grounds early next week, and if Bank Nifty breaks its last week's low, finance, Bank Nifty, private bank, if they break these lows, then it can easily drag the Nifty down. Which means if I'm a derivatives trader and I look to go short as well, then this is the pocket where I should look for shorts. Right? So you can do your research on banks, financials, especially private sector banks, and find whether it's an ICICI bank or an Axis bank or an HDFC, which can lead to this breakdown. Which may. The next one are the sectors, the main 8 sectors I've taken. I have a premium subscription of TradingView, which allows me to plot 8 charts at a time maximum. I cannot plot more than that. So I've plotted IT, and in a clockwise manner, I've taken the various sectoral charts on a descending manner of their weightage. After the Bank Nifty, the second most important index, the second most important sector to the Nifty is the IT, and then energy, and likewise the least is realty. So I will look at them in a clockwise manner. I'll turn them to the weekly charts. That's what we are essentially analyzing today evening. IT creates a big outside bar. We know we saw that breakdown. We saw a pullback, and then we did see a follow through move. It's not going to be easy. The good thing about CNX IT is got its trend in position, but the momentum is slipping, and back of it, it had a divergence to deal with. What does this mean? This means that this strong uptrending sector will now definitely go choppy and will try to consolidate or correct. So we are likely to find both short-term long as well as short-term short trades situations from the IT. It's not completely bullish. And if you ask me between the trend and the momentum, which one is more stronger, on which can we rely more, I would always say rely on the trend more. Right? So try not to look, if you're a derivatives trader, try not to look for a short trade within this pack. On the other hand, If next week the market sustains, then you can see a move from the IT. It can support the dollar. The dollar's effect may continue in this pack and in this one. I'll come to it. The next one is energy. Now the energy has given last week a decent bounce back. I do see a bit of a short-term divergence kicking in with the RSI indicator. I need to shift this to Heikin-Ashi to see if there's any kind of a merit to this particular setup of ours. It's not bad. It can offer us a bounce back. I would suggest keep an eye on stocks like Reliance Industries for a short-term bounce back. FMCG seems to be forming some kind of a double bottomish pattern. Seems like price is telling us that. Typical double bottom breakout will come above this level. Momentum is improving. There's a bit of a divergence with the short-term RSI. It is the sector which fell really sharp. So you can keep an eye on stocks like Tata Consumer Durables and Hindustan Unilever. Just see how those charts are playing out. Auto gave a good move. That's the one that led the move. The sector essentially is range bound. It's not an uptrending sector. Neither is it a downtrending sector. It's just range bound. It did give us a sharp move. However, I would say the two-wheeler stocks like a Bajaj Auto or a Hero MotoCo has lots to do. Asher Motors have done relatively way better, though very choppy. Tata Motors is still very much struggling. So I don't think it's completely out of the shadows as of now. There are no bullish signals apart from the fact that the momentum is improving. Right? So any of these four sectoral indices we looked at right now, in IT, you can look for a short-term trading opportunity. In energy, maybe a short-term bounce back. An auto, of course, maybe a short-term trade. It's not giving you that confidence. Long-term investors can definitely take a look at FMCG stocks and you might find them at relatively better price, something like a Dabur or a Hindustan Unilever. Then the sector which really has performed over the last few weeks, that's pharma. Dr. Reddy was the one that led the move. Sun Pharma followed through. Lupin, wonderful rally. Oro, Cipla and others also kicked in. It's the strongest looking sector right now alongside consumer durables. So if we have to strategize ourselves that if the Nifty sustains and if the Nifty gives a rally next week, where can I find some opportunity? On consumer durables is not a bad looking chart. The weekly chart has given us a good move. Trend momentum are in sync and you can expect further upsides going by the charts. Pharma, definitely it has held well. However, it is back to its previous highs. And of course, it will be extremely important to see whether those highs act as resistance or not. Same logic goes for consumer durables also, by the way. So if you're looking for any long opportunity, try not to take those which has already rallied significantly. Try and look for a pullback or try and look for someone which is giving a fresh breakout. So consumer durables, pharma, try not to short them. Coming to metals and realty. Now metals is an index. At the current juncture, it's all weak. Trend is weak. Momentum is weak. And on the weekly time frame, I like to call these kind of a price behavior a decoy bar. Long story short, if this low, last week's low is broken, expect weakness from the metal stocks. Clearly means it's the charts are too, the Heikin-Ashi chart also too pretty much weak. Are there any signs of a reversal or slowdown? Not really. So if it bounces back, it will just bounce back just like that without giving us any clue on the weekly time frame. So if that theory holds, or if that theory shows up that the Nifty has failed to hold on to its rally and the Nifty is breaking down, of course many stocks and many sectors will come down. But looking at the weekly charts, our picks will be the banking, the financials, the private sectors, and then followed by metals. Right? Last, realty. Not bad. Means It had its share of rise and fall. It has kind of consolidated. It is probably going for that major breakout. If you ask me, my trend indicators and momentum indicators are positive. It has slipped a little bit last week to 2.5%. I'll quickly cross check with the Heiken, which is okay looking, which is not bearish. So reality can be a pocket of, let's say, pullback long. If you see next week reality going above last week's high, then reality can be a pocket of strength. So you've got pocket of, let's say, not strength, but I would say pockets wherein we can see a follow through upside. You can keep an eye on reality. You can keep an eye on consumer durables and pharma. Just be careful not to chase anything which has gone up for 5, 6, 7 days consecutively. Leave them behind. They will be tired. Bounce back candidates can be energy, can be FMCG. Auto, I'm not too sure. Auto has given quite a bit of a move last week, so it is very likely to slow down. And then IT, you need to be little, picky there. On the downside, if the market fails, look for which sector is dragging the market down. And if you find that the banks and the private banks and the metals are doing it, get ready, position yourself on the short side. Last week's post on the on my weekly analysis had some suggestions that please share your views on few of the international indices, gold and crude, and so I'll quickly take a couple of minutes more and walk you through those. First, of course, the dollar, which is tracked by DXY, which we used to call Dixie, now strong weekly chart, decently strong daily chart. If I change this weekly to the monthly chart, the dollar index has given you what they would like to call a breakout. After being range bound for a very long time, on the monthly chart, this breakout is a serious thing. Looks like it should head further up. And if that's the case, that's not good news for us. That may be good news to a lot of extent to ITs and pharma, but overall market's not that great. So dollar may continue to cause worry. I would first like to see some sign of slowdown before I say, okay, dollar seems to be stabilizing, we can go more bullish. I don't have such a sign on the weekly chart. I don't have such a sign on the daily chart. It may come next week, but it's very good looking bullish chart, the dollar. So we have to keep that back of our mind. Don't go overly blindly bullish on the markets right now. Gold on the COMEX is choppy. It's slowing down for the last month and a half, I think couple of months now. On the daily time frame, it has given us a short-term bounce back. It's more like a trading candidate now. It does not have a very strong trend behind it. Of late, sharp rallies has happened couple of times, and both the times it has failed to follow through. It's picking up again for the last 2 days. Let's see if it pulls back and gives us a move or not. So gold is not giving you that kind of a confidence from the daily time frame. From the weekly, it's kind of down, choppy down. This is the COMEX chart. Crude. Now this can be a point of discussion and talks going forward, because you can see after one leg pull back, we have the second leg. And in this second leg of rally, I'm looking at NYMEX crude. It has gone up consecutive for like 5 days now. 5 days of consecutive rally. This has helped the weekly chart, and this has helped the weekly chart to give a short-term breakout, a very short-term breakout. It has fractal highs close to 78, 80, close to 82. So there are levels where crude would like to retest. Choppy, yeah, it has been choppy. It has now given us a nice little trend. So crude's short-term breakout, will it lead to further rally? And beyond which point will it start to pinch or hurt, we have to keep that back of our mind. So your OMC companies, directly, indirectly, your inflation numbers, one needs to be careful. What's left? S&P 500. Now, first leg of fall, steep rally, and again second leg of fall. If you have, joined any of our programs, this is a short setup. So indeed it is on the S&P 500. The Dow Jones is choppy right at the previous lows. It's behaving very similar to what our market was behaving last week, back to its previous lows. And then you have the Nasdaq, which is clearly in a downtrend and giving you a clear open pullback short setup. If Friday's lows are broken, Nasdaq is coming down. It's coming down means structurally it's getting weak and it should come down. So overall equity markets, the US markets seems to be slowing down. The German markets, yes, a pretty nice pullback which can offer further downside. And the UK markets are kind of choppy, very, very choppy. Not much clarity at all. So not something that is across the board bullish or bearish. Mostly bearish. I would say if I take up 10 markers, then 6 of them will be on the bearish side and 3 or 4 of them will be on the bullish side. But the bullish side markers will be just improvement, nascent improvement, and the bearish ones are more of an overhang. So bottom line is, don't be blindly aggressively bullish. Don't be blindly aggressively bearish also. But if last week's low of the Nifty, Bank Nifty and what we analyze right now is broken, the derivatives trader and the short trades should be ready. On the long side, if you're trading, I would strongly suggest hit and run trading. Please take some short, quick trades and get out. Before I finish the sectoral analysis, I'll just tell you that for the last week and a half, whatever trades that I have managed to do, I use few levels, hurdle 1, hurdle 2, like that. And my hurdle 1 is the smallest profit. All the trades would have been gone right if I had caught the smallest profit, but then it reversed. So what I've learned from my trades, the last, I would say 6 trades, is the market is not giving me a sizable profit on the short side or on the long side. So whatever it's giving me is relatively small. I need to take it and get out as soon as possible. Right? So that's it. That's our weekly sectoral analysis. Let's move on to our usual class. So please ask your doubts and questions and I'll take it up one by one.